So, rising interest rates. What does this mean for property investors and for UK property? Let's find out. Welcome back. My name is Marco. I'm a property investor, developer, and mentor. And today we're talking about interest rates, and more specifically, rising interest rates. Rising interest rates. What does this mean for property investors? What does this mean for property in the UK? To understand the implications and what this effect this is going to have on us, we need to understand the past and the history about this. If you look in the early 90s, interest rates were, around 15%. Bank of England base rates were around 15%, which is absolutely crazy. That's absolutely phenomenal to think about, really, isn't it? Now, when the recession came, the 7-8 recession, the financial crash, interest rates slowly began to come down. So I think it was the early 2000, in the 2010, maybe 11 or 12, interest rates were pretty much reduced to near zero. That's really important to understand when we're looking forward and learning lessons from the past. So let's take where we are today in the start in January 2023. Well, I'm not concerned about the base rate too much. What I'm looking at now is what lenders are offering, and limited company buy-to-let mortgages are kind of around the 5.5% mark, within that rough range. Now, is this high? Well, if you're looking over the past 5-10 years, then yes, of course it's high, because the base rates were so low, and we were so lucky and so fortunate to have so low base rates when it comes to property investing. It almost made leveraging and getting mortgages a no-brainer. But actually, rates are still relatively low. Compare these to the 90s. Compare this to just prior to 2010. These rates are still relatively low. So, although they seem high, they only seem relatively high. So, rates are still feasible. Deals do stack up, but certain property strategies are no longer that profitable, when compared to what interest rates were before. So that's a really important point to know. Don't be put off by these higher interest rates. They're only relatively higher. They're still okay in the grand scheme of things. Now, why are interest rates increasing? Well, for any of you who have studied economics 101, if inflation is increasing, well, what do? You increase the interest rates to try combat this. It's pretty much the first thing you learn in economics. And this is why interest rates have been increasing over time, to curb and combat the really high growth in inflation, which is double digits. So we need to bring this down, or the Bank of England looks to reduce this to around 2%. And once inflation is slowly going to come down and the growth of inflation slows, then only will we see interest rates starting to ease and maybe decline. So this is why interest rates are rising. On a very brief terms, of course, there are other reasons why interest rates are going up, but it's mainly to do with inflation. So let's get back to the office and find out what effect this has on property investors and property in general. So I hope that gives you a better idea about the history of interest rates. And as we know, it's so vitally important that we keep inflation under control by using the interest rate as a mechanism to do so. So what I want to do first of all is just paint the picture on how interest-only mortgages and the repayment that us as investors, as property investors, make has changed so drastically even over the last 6 months. And let's use a little example here together. So let's say we're assuming we're buying a property at, say, £100,000, and it doesn't really matter when we bought this property. Let's even assume we bought it last year at £100,000. And let's say we've got a buy-to-let interest-only mortgage at around the kind of 3.5% mark, which again was more than realistic, more than feasible to obtain a mortgage at that level last year in 2022. Well, we'd be paying somewhere around £150, £200 per month on the mortgage on this particular property, which, back then was great, absolutely amazing. And I don't think a lot of investors realised how good that repayment actually was. Only paying £150, £200 every single month to that lender. Whereas now, limited company buy-to-let rates are around 5.5%. That mortgage payment has increased to about £350. So, it's in effect, it's almost doubled. In some cases, it's more than doubled. So, we were paying, say, £150, £200. Even if, let's go on the higher end, let's say we were paying £200 and we're now paying £350. That's £150. That's, we're essentially not making a profit every single month. And obviously, if you add that over 12 months, 150 times 12, that's £1,800 that could have been in our pocket that £1,800, we could have had profit every single year if interest rates had not moved. So again, this is quite substantial really if you think about it, because that's just one property. But imagine if we're scaling up to 20, 40, 60, 80, 100 properties, the effect is absolutely outstanding. Now, one thing we haven't really spoken about is what are landlords going to do about this? For those landlords that have just seen their returns starting to decrease as mortgage costs have increased, what's going on here? Obviously, some landlords are passing some, if not all of this, on to the tenants. But again, there's only so much you can pass on. It really depends upon the price point that properties are renting out in those specific areas, because again, you're going to have landlords that don't have mortgages and they're not really pressured to increase rents by that much, and maybe they're just doing it to match inflation or something like that. So it's going to be really interesting to see what happens in the market in the next 6 or 12 months. I've been putting up my rents either in line with inflation or slightly less than that if I've got existing tenants in the building that I'm really, really happy with, and we've got a really good relationship together. I'm not passing on that full 10% to them. Inflation is probably actually more than 10%, but that's what it's being published at the moment. I'm actually absorbing some of that cost myself because I know they're a great tenant, and now I'm valuing a great tenant much more than what I did in the past. And what I mean by this is when the cost of living crisis really kicks in 2023, people are going to be squeezed. Utility prices are absolutely ridiculous. And, some people are going to start looking at the rent and thinking, gosh, I don't know if I can afford to pay this. And this is why I'm being very generous with my tenants, because when, if this time comes, I want them to have as much cash as possible in order to actually pay my rent. So it's a big win for everyone. They're not getting their rents increased, to what really they should be, but I'm also allowing them to save a bit more money to, maintain that lifestyle that they had in the past. So what does this mean for property prices in the UK, and more specifically if we move away from investors but homeowners? Well, obviously homeowners cannot afford to borrow what they could say in the start of 2022. Take us, for example, me and my wife, we're in the process of moving homes and we've been looking for property to purchase, and our budget in February 2022 is nowhere near what it is now in 2023. We've already found a place. We found a place in December 2022 and we got a really good deal on that property. Obviously, it's not the best time to be selling properties, so through my network and through my experience as a property investor, I managed to secure a really good deal for us. But that being said, people like us and other people who are looking to buy, their next home or first home, they just can't afford to buy at that level that they previously were thinking about in the first half of 2022. And again, that's all because of interest rates. And what I mean here is the exact same example that we've just used. Your monthly repayment on that mortgage is just so much higher. And for me, I like to operate quite trimly. I don't like to gear and to finance myself too much. I'd much rather be living on a more frugal lifestyle. Okay, yes, I fly, I understand, I do things like that. But for me, I don't put things on finance. I really don't like putting things on finance. I like to live a simple life. Me and my wife, we like going for walks. We like doing everything natural like that, and that's completely free of charge, right? So, just be wary when it comes to putting stuff on finance, especially when costs are going to increase. Utility costs are going up. If you have to remortgage, again, your mortgage payments will be increasing. So really important point there. People who are looking to buy their own home simply can't buy that same caliber and level of property as which they could afforded at the beginning of 2022. And because of this, what happens? Well, of course, property prices fall. So prices fall, and if you're lucky, you can actually obtain the same caliber of property for a reduced price. And if you're upsizing like we are, this can work to your advantage because it costs you less to upsize. Okay, you're going to have to maybe sell your own property slightly below what you were hoping for, but the next property you're moving up to, you can negotiate a greater discount on. So actually, it's a really good time to consider upsizing. However, if you're downsizing, obviously it's the reverse, because you're going to have to sell your bigger property at probably a more of a discount to move into your smaller property. So prices are falling because interest rates are rising, because people can't afford to borrow that much. It's as simple as that. Now let's come on to confidence. Confidence is absolutely huge, and confidence is the most understated factor in the property market. I was out for dinner about a month ago with a guy who's huge in commercial property. He's in his 70s, seasoned investor, really experienced guy, and he said, Marco, all about confidence and nothing else. And what he came on to tell me, he said, even when the property market recovers, say in 2, 3, 4 years time, who's know when it's going to start being on the upwards trend, he says confidence is still going to be really poor. It's still going to be rock bottom, and investors aren't going to be investing. And he says this is one of the times when you have to be brave and you have to invest, because everything is telling you to invest. Your rational mind is telling you to invest because these deals look almost too good to be true, but because confidence is so poor, people aren't investing. So a really good tip there from someone who's lived through multiple recessions, who is a millionaire through property, and that's a tip that I want to pass on to everyone watching this video. And it's about having the confidence, it's about having the balls, excuse my language, to invest when confidence is really, really low. And this is something that I actually came across a couple of years ago, and I consciously tell myself every single day to invest when those are scared and when those are fearful. Of course, a lot of you know the Warren Buffett quote, something along the lines of, invest when others are scared, and when others are greedy, don't invest. So again, that's something you want to think about. And just one point I want to hammer home on confidence is good deals go unnoticed because people are just, they're so emotional. Because confidence is low, they're emotionally out the market. Marco, I'm not investing, I've just got no interest, there's no confidence, and I'm not confident, even though there are some really good deals to be had. So don't miss out on that phase in the market. Maybe make sure you've got a little bit of funds left in your bank account to make the most of those transactions, as we come out of the recession, shortly before we come out of the recession, when confidence is still low, but figures are improving. Okay, so future, what does the future hold? Well, of course, interest rates are going to be increasing more to combat inflation. We know that. Some people think they're going to be 4.5, others think they're going to be 5, some people think they're going to be even more than that. What do I think? Being brutally honest, I don't know. I really don't know. And to put a figure on it is very difficult. People that try and put a figure on it are often wrong. But I'll tell you what I'm doing so you can maybe see how I'm forecasting my deals going forward. I'm using a base rate of 5% to forecast my deals going forward. Now, this isn't the interest rate I'm using a base rate of 5%, then lenders will use a markup on that. So, if you're using a 7% lending rate on property, which I think it will be lower than that, but hey, let's rather be on the safe side, right? If you're using a 7% to stress your property deals and they work at 7%, I would pull the trigger. I really, really would. I don't think rates are going to get above this. Maybe they will for the short term, but for the medium to long term, I highly doubt that. I could be wrong. Don't take my word for it, but this is what I'm forecasting and this is how I'm working my figures. So if something works on a 7% interest-only mortgage, I'm buying it. Again, if it's below, it has to be below market value because prices are going to fall in the future. So, if I'm buying, say, at 60, 75% market value, I'm protecting myself if property prices fall by another 15%, which I think they will. Another point to note here, a really important point to note here, is inflation erodes the value of your debt. So if you've got a mortgage and you're paying back this mortgage and there's really high inflation, well, that pound can no longer buy that same basket of goods that it could last year or the year before that. So actually using finance and buy-to-let mortgages is a great way to erode the value of your debt. And a lot of people don't think about this, and it's really important because when you come, say, in 5 years' time to refinance or remortgage that property, not only is the value of that debt worth less, even though you haven't been paying back the capital, but you can then hopefully benefit from capital appreciation. So it's a really important point there to note that a lot of investors don't even think about. So Marco, what shall I do? You told me interest rates are rising. You told me the impact upon investors. What shall I do? Well, first of all, stress test your future property deals around, say, 7%. That's what I'm doing. Some of you could choose to stress test slightly lower than that if you're maybe taking on a bit more risk, but I'd much rather be conservative. You'd much rather be pleasantly surprised than having to fork out more than what you thought you were going to have to fork out on your monthly mortgage payments. Keep searching again because there are some really good property deals to be had, now. Yes, prices are falling, but if you're buying below market value and you've got a large margin of safety for when prices do fall and you're still in positive equity and making good money, why wouldn't you purchase? If it hits your criteria, if it hits your strategy, then I strongly recommend that you consider purchasing because the opportunity cost of having those funds in your bank for, say, 12 or 24 months, is substantial. You could be earning a very nice rental income over those 12, 24 months. So if you're looking to invest in property, you're still not too confident with interest rates and predicting lender rates and actually making deals stack, please head to my website www.ms7.uk, book in a call with me. I'm more than happy to help. I'm very passionate about helping people on that property investing journey. If you haven't already done so, please do consider subscribing to the channel. YouTube tells me the majority of people watching this video are not subscribed. You know, every Tuesday and every Thursday at 2 o'clock I release a video. And thank you very much to all the comments and really nice emails that I get, and for those that really enjoy and have gotten a lot of value from this content. It really does mean a lot to me, so please do keep that up. I wish you the very best with your week and good luck with your property investing.